incredible stat. You guys have mapped 36% of the world's roads in just a few years.
A lot of companies are starting to deploy robo-taxis, and so there's a lot of different parts of robo-taxis that are trying to get right. So what you're basically trying to do is map very, very, very detailed parts of the city so you can understand where are the good drop-off points and pickup points and where are the bad ones. Obviously, helium's the first that has hit this deflationary point. And so I think the question for them is going to be, and for the entire category as a whole, is that can they leverage this very important milestone, this amazing milestone that they've achieved now, and can they leverage that into a narrative that makes sense for everybody? There's a good signal, right, that the DePIN industry, the DePIN category is maturing because now people are being a little bit smarter about what is good supply versus bad supply. There is no world in which contributors are competing with commercial fleets and that we don't need both. Like I fundamentally don't believe that at all.
How are you? You still holding it down in SF?
I'm actually in DC today.
Interesting. Okay.
Yeah.
Is that like policy stuff or a different trip or what's going on?
Yeah. I'm meeting with some senators today.
That is bullish. That's exciting.
Yeah.
The latest like policy thing I heard with regards to DePIN, or at least like 00, was the no action letter, which I think made them feel comfortable launching their token. But I think people were kind of trying to extrapolate that to DePIN, and I wasn't sure if it actually did. I didn't take the time to read it, but sounds like there's some more good work being done for DePIN in DC. So
yeah, there is. I mean, I think there's like, it's an easy story for these guys to understand, right? Like a lot of the other crypto stuff is like a little bit over their head, quite frankly. This is like more tangible, all that kind of stuff. So that's good.
Yeah, I think Neil from Dawn had some good things to say as well when I interviewed him on the podcast. He was even like, there's not an anti-crypto lobby anymore. Basically, like we've shot ourselves in the foot in the past, and the reception for him and Don and some of the other DePINs he felt like was pretty warm, given the real world relevancy and disaster relief and kind of all the things that.
I don't know who he met with, but I think they're still, I think
still
if you
showed up,
I think you should have Elizabeth Warren's office.
Fair.
I don't think it would be a very warm conversation.
Yeah, 100%. But generally, you're still in SF, right? In terms of
definitely. Yeah, definitely.
Have you seen a resurgence there in terms of crypto and tech and politics and all that stuff?
Tech for sure, like 1,000%. I actually think that Coinbase made an announcement that they were going to like kind of dip their toe back into the city, because obviously they left. They were here in San Francisco, but yes, for AI, crypto, I think it's like not really, to be honest with you. I think I will say this though, stable coins is potentially going to change that, right? Like now YC and some other of these organizations are pushing people to really do like stablecoin backed technologies and all that type of stuff. So I definitely think there's something there.
Yeah, we caught up a little bit already, but maybe just wanted to kick off with, we last had you on in January of 2024. I went back and looked. It was with Sammy and myself, which was a great episode. And I think looking at the charts, I think
March of feels like forever.
Yeah, I know. I think March of 2024 was kind of the peak of excitement and price action for DePIN tokens specifically. And things were going really well then. And there's been a ton of progress made by DePIN since then, but I feel like the markets have lagged. And I know you and I are two of the biggest, loudest DePIN defenders, like, on the timeline, and kind of are excited about all the progress that's been made, but it seems like the market doesn't always reflect that for the sector as a whole. So maybe like, what do you think is going on there or here? Like, are investors behind the times? Why do you think there's this mismatch between like all the progress that's been made by DePINs since March of last year, but maybe, that hasn't been reflected in the charts we've seen a lot of raises recently, but yeah, curious your take.
So let's see. A lot of things I think have occurred. One is when DePIN, really started to like capture the imagination of people across crypto and even beyond crypto, right? I think it was like one of those first categories where people beyond crypto looked at it and said, oh, that makes sense actually. That's a smart, clever, way to use crypto technology, right? And so in the early days, all these projects, including Hivemapper, were basically all supply, very little demand, if any demand. That's just the nature of when you're building a marketplace, you have to start with one side, right? And so the basic thing is you go out, you build up a whole bunch of supply to the point where then demand actually cares, right? And so demand starts to care, but the demand curve just moves at a different pace and it compounds very differently than supply, right? If you have an interesting piece of technology and if it's easy to use and all that type of stuff, you can actually like generate a tremendous amount of supply and do that fairly quickly, right? Okay, so then demand starts to like grow and compound and grow. And now the crypto markets, they're a little bit impatient. We'll talk more a little bit about some of the other things that are going on in the crypto markets. But needless to say, then you end up in a scenario that I think we find ourselves in and some other big projects like Helium find themselves in, where the demand is far exceeding the supply, right? And the token prices are a part of that equation where the token prices are now down. So it's actually much harder to generate supply, right? And so I think that's the mismatch here that we have to solve as an industry, as a group, in case of Hivemapper, we have to solve that as well. And there's not one solution, right? Sure, like token price go up, it solves one part of the problem, but I think it's probably deeper than that. But that's kind of like the lay of the land in terms of like where we're at, probably starting in 2023 to like where we're at today.
Yeah, and you had this great post, which I think you were kind of referencing, which this chart I think does a good job of describing. Like for a lot of DePINs, they peak in terms of supply too early before demand has really ramped. And so is that where you feel like some DePINs are today? And maybe where would you say like Hivemapper sits on this kind of scale or spectrum?
Yeah, I don't think it's that. I would maybe caveat that a little bit, where I think it's very hard to show up to customers. I was meeting with a customer yesterday, and their big thing is like coverage, right? Like every single conversation I'm having right now is coverage, right? So even when we've mapped 36% of the global road network, and even then customers are saying coverage, more coverage, right? Like if you go to, let's say, a Marseille, France, which I think is the second or third largest city in France, we need more coverage there. We need it's on the map. I'm not telling anybody anything, that they can't figure out. And so, anyways, getting back to your original point there is like, I think it's important to generate a lot of supply, right? Early days. So you can then show up to customers and be like, here, like, this is legit. This is real. This is not just like, oh, we have San Francisco and LA and maybe one or two other markets. It's like, this thing is growing. But yeah, I think the crypto markets, if we want to dig into like the crypto markets and kind of some of the things that have happened in the crypto markets that have sucked liquidity out of DePIN, I think that's an interesting conversation, and kind of what are the things that are necessary to kind of bring that liquidity back into DePIN.
Yeah, for sure. I think Alana Levin, I think, is at Variant or Paradigm or one of these funds, but she had a post recently that was basically like, there is an alt season and it's happening right now, but it's in crypto equities, not in crypto tokens. And she made a good argument for that. So I think that maybe could be something you're referencing in terms of DATs and liquidity being pulled out. But maybe let's talk about the big news for you guys recently, which is the fundraise. So congrats on that. First off, $32 million, huge round from Pantera, LDA, Borderless, and I think Ajna is how you say that. But what was the motivation behind the round? How did it come together? Just like what was the kind of the behind the scenes of raising all that money?
I think it was a process. I don't think it was like one thing. I think it was like a process. I mean, definitely like some of the customer wins that we've had with Lyft and with Volkswagen. In addition to that, some of our earlier customers starting to kind of grow their spend with us, right, and kind of go deeper integration with us in terms of our data, our products, as well as theirs. I think the other big thing has been the success on starting to ramp. I'm not sure like we're through the woods yet, but I think that like there's the early signal that the commercial fleet side is also starting to work, right? We have like some significant sized commercial fleets. People are starting to see the vision of like, we have this trucking company, and the kinds of stuff they want to use and that they're starting to use Hivemapper for is pretty cool, right? It's like, hey, you guys can now read all the gas prices, right? Gas is the biggest spend for my fleet by far, right? It's basically like, salaries and gas. Everything else is like little details on the Excel spreadsheet. And so, that type of traction in that customer base is exciting. And then, when we said there's a new chapter, there's some other things that are coming as well that I wish I could tell you, but then my marketing team would probably kill if I did that.
Yeah, no worries. Well, I mean, the other thing, I guess one more thing on the fundraise is, what do you plan to use the funds for, kind of like both short-term and long-term, right? You're building hardware, you're building software. You're spending on marketing to acquire customers. Like, what do you see those funds as being used primarily for? What are you excited to use them for?
I mean, all the above. I mean, it's basically like all the stuff that we were doing before, but just doing it more aggressively now, I think is probably the name of the game. There will be some new products that we're launching as well. One of them I'm particularly super excited about, that I think the community is going to be excited about. I think that our logistic commercial customers and, commercial fleets are going to be excited about. So this one's really interesting. And in a lot of ways, it kind of completes the loop for us. The other thing is we love the B, obviously. We're very proud of it. It's I think, quite frankly, the reason that a lot of the customers that we've gotten has been because of the data that's coming off the B. Like, we fundamentally couldn't do it without the B. But I think getting back to your other point is, like, now we can offer the B for $18 a month, right? And so obviously, like, we're taking risk associated with building these devices and then effectively leasing them out, right, at $18 a month, with a subscription, with a data plan, with all the software, et cetera. That's very accessible, right? It may not be for everybody, right? And if you just want to go and buy the hardware straight up, you can still go do that, right? No issue. And you don't, even if you just buy the hardware straight up and you could just use the Wi-Fi Connect, which is totally free, it's a very passive experience. But, taking bets like that, that's what this fundraise allows us to do.
Gotcha. Okay. Yeah. I was going to ask that as maybe a follow-up question, but how do you ensure purchasers pay off the device for the 24-month period? Like, is it similar to like phone plans from carriers? Like, if I buy an iPhone through AT&T, they can like shut my service off, I guess, if I don't pay. Is that how it work? But you can't like repo the devices, right?
Yeah, it's going to be, look, there's some risk there. I mean, I'm not, there's definitely some risk. Most of the people who are buying them so far have been fleets, right? Not crypto folks, for a whole bunch of reasons we can get into. And that was like, we weren't surprised by that at all. If you show up to a commercial fleet today and you say, hey, this is what you get for $18 a month or $19 a month, they're like, what? Like, that's incredible, right? Because the competition, starts at like $30 a month, right? They get the data plan, they get the hardware. And most of these are businesses, and what they're, when we historically would show up to them and say, hey, look, here's the B, here's it does, here's all the software, yada, yada. They'd be like, I don't want to spend $75,000 in cash to go buy your devices. Like, I just want to pay a monthly fee. Right. And then when, after 2 or 3 years, either we renew with you guys or we don't renew with you guys and we send the devices back. And so that's really what this plan is about. So I think the vast majority of people who are going to opt for this plan are less the crypto community and more the commercial fleets. But, if crypto folks want to do it as well, we're obviously, it's a product that will sell to anybody.
Yeah. So it sounds like fleets are becoming a bigger and bigger part of the plan, which gives you some kind of like protection around, purchasers paying off the device and stuff because you're dealing with businesses. And you mentioned it a bit before in terms of like reading gas prices off the road. I think you've also said in the past, like, if you get in a crash or something, having a dash cam is good for insurance purposes. But what are some of the benefits, whether it's like an individual crypto miner person or whether it's a fleet owner, of the dash cam besides just that it maps and it mines crypto, right? Like, what are some of the practical kind of benefits there?
So there's a couple. One is you can use it for insurance purposes, right? So if you're like an Uber driver, Lyft driver, DoorDash driver, and then you basically say to them, hey, in some states, you actually automatically get, I think, 5 or 10% discount on your insurance. I think that's New York State, if I recall correctly. So if you basically go to your insurance company and say, hey, I have a dash cam, here's what it is, here's the data, et cetera, and I drive with all the time, they have to give you, I think, a 5 or 10% discount in the state of New York. Others will just do it because, it provides like a record of everything you've done. So you like look at trip history and all that type of stuff. You can look at, speeding events and all that type of stuff as well. So there's a tremendous amount of data there as you as like just an individual getting value out of it. If you do get into an accident, you can then basically just look for, I should say, pull the video from the device in and around that time. And you can do that remotely, right? You don't have to like physically be at the device. So you could basically just like, log into our website, go and say, oh, I got into an accident at 1 p.m., on Monday, boom, pull that video up from the device. So we store the last 10 hours of video on the device and then allow you to go pull it remotely from the device through our web app. And that's been, I know of a couple of instances, at least personally, where people have come to me and be like, oh my God, thank you. This is awesome. This is very helpful, all that kind of stuff. So that's been gratifying to help them in a tough situation.
No, that makes a ton of sense. Maybe going to demand side before supply side, given the focus that you guys have had recently on that. And I think that's what everyone wants to hear about. So maybe let's talk about the top like 3 use cases you've been seeing for Hivemapper data. And obviously any customers you guys can disclose or use cases. I mean, I think you've been public about some of that, but would love to hear just, real examples of, large companies that are using the data, using the products that you guys offer.
Okay, so let's talk robo-taxis, right? So now a lot of companies are starting to deploy robo-taxis. And so there's a lot of different parts of robo-taxis that are trying to get right? And so one is what's referred to as pickup and drop off points, right? And so you really want to know exactly where the robo-taxi should pick up somebody and drop off somebody. And there's a lot of different factors that go into that. Like if you don't want your vehicle, your robo-taxi to go pick up somebody in a construction work zone, that would not be good, right? So understanding where all the different construction work zones are in the city is very valuable. Understanding where the fire hydrants are, right? Because you don't want to pull up right by a fire hydrant, right? So what you're basically trying to do is map very, very, very detailed parts of the city so you can understand where are the good drop-off points and pickup points and where are the bad ones, right? And then what you effectively do is you say, okay, if you're within this, call it 100-meter radius, you as the customer, right, requesting a robo-taxi, then they can literally tell you, go to this exact point on the sidewalk, right? And that is a safe, pickup point. Or when you get to drop off, they're like, okay, yeah, you want to go to this destination, but I can't drop you exactly there. I can drop you maybe 20 meters from there or 30 meters from here, and here's the drop-off point. So just a tremendous, amount of detailed information that we provide our customers in that use case. The other one, also again for robotaxi, is planning, right? So what they usually do is they start with like a relatively constrained geographic area. I mean, even Tesla does this as well. And then they say, okay, like where are we going to go next, right? Either within the city or within the metro area or to a new city. And what they're leveraging all of our data, like in terms of road width, in terms of lanes, in terms of, speed limits and turn restrictions and, intersection complexity and all this type of stuff to then figure out where to go next, right? In terms of expanding out, so that's another use case. The third use case, again, going back to robotaxis or staying with robotaxis, is training their models, right? And so there's all these like weird edge cases that just go on forever and ever and ever. And what we do is we provide them the raw data that then helps them actually train those models to get better and better. And a lot of these models need to be trained, by geography. Like what works in New York City is not going to necessarily, let me restate that. The edge cases that you see in New York City are different than the edge cases that one sees like in a San Diego, right? And so, having good diversity of different types of edge cases based upon the geography is also very important. So, those are some of the exciting use cases that we see. There's a lot of others. We're seeing more and more cities and companies that sell to cities and states kind of come in and start to leverage data that then they turn back and sell to cities. There's, NBC. I can't talk too much about the NBC use case, but that one is super cool, very, very ambitious in terms of what they're trying to do. And I'll let them at the right moment kind of share what they're doing and how they're leveraging our data.
Yeah, I have no idea what that could be, but that's cool.
Yeah. It's I was kind of surprised when I heard it. They reached out to us and they're like, yeah. I mean, there's a lot of other people that are kind of doing. I'm saying a lot, but there's definitely I know of at least 3 or 4 other companies that are trying to do something similar to what NBC is doing. They have a lot of other assets they can bring to bear. So it's going to be exciting to kind of see how that all plays out.
We always have to ask for a bit of alpha on this podcast. You can definitely say no, but something I've been doing recently with founders is just being with DePIN founders is asking, can you disclose any kind of rough revenue numbers? I think Andre from Grass was found a chart that said DePIN on Solana had done 1.6 million of revenue in the last month, and he was like, well, we're above that on a monthly rate. So that was his way of sharing a bit about revenue. But yeah, curious if you guys have any numbers you can share there.
I think for the year, I mean, I'm just trying to when you share that 1.6 for the year, we'll do if you were to take that 1.6, that's 1.6 per month, right?
Mm-hmm. DePINs on Solana. I mean, the number could have been wrong too. I don't know, but
one of the things that we're working on right now, but our revenue tends to be a little bit spiky, right? So what happens is you get a customer and they're like, okay, I'm graduating from let's call it, a $50,000 deal to a $150,000 deal. Okay. In most cases, the way the contract is written is we get all 150,000 upfront, right? And so, but then they'll be like, okay, I'm going to start to use the 150,000. I use it over the next 6-9 months, whatever it is. And then they kind of re-up, right? And so the way that it kind of hits our books is a little bit lumpy. We're trying to change some stuff so it looks a little bit, so it is a little bit smoother because they're actually consuming it throughout the contract, even though they kind of pay us for it. Now we're moving to more and more of a contract where it's there's let me get to that in a second. But yeah, getting back to your question of we're not quite exceeding 10 million. If you could take that number, it's actually more than 10 million. Yeah, it's getting real numbers. I would say this. We just signed a multi-year, multi-million-dollar contract. And then when the time is right, we'll hopefully announce who that is and, what we're working on together and all that type of good stuff. But for a lot of our customers now, especially the ones who joined us in the early days, they've kind of progressed from, maybe dipping their toe for 25,000 or 50,000 to okay, a couple 100,000 to $500,000 to, now millions. And then, longer duration contracts as well, which is, really helpful for us in terms of just giving us that predictability, right? We know what to expect over the next 2 years or 3 years and all that type of stuff.
For sure. Well, that's awesome. Congrats on that. I'm personally curious. And I saw some questions on Twitter about, I think I know the basics, but if you could just give us kind of an overview of how does the revenue coming in and the deals that BMaps signs, how does that accrue value to the Honey token? How does the whole kind of demand side of the economy work?
Okay, so that's a good question. Generally speaking, there's 2 different types of products from a data perspective. There is data that the bee is generating. Okay, so that's this edge AI that there's a whole MIP or map improvement proposal that recently passed that describes how that revenue gets allocated to the Honey token, right? And so anyone can go read that. It's very public. Over time, more and more of the data that is being sold to customers is actually being, is being generated by the bee, right? And what I mean by that is yes, we sell imagery still to customers and a lot of customers still consume imagery. But both the historical devices, the HDCs, as well as the bee can generate imagery, right? So for that, it's simpler. It's like roughly about 30% of all revenue. So if you sell it for $1 per road kilometer, then about 30 cents gets allocated to the honey token, right, to go buy and burn. With the Edge AI, there's a formula which is basically like on a weekly basis per unique road kilometers, how much is being allocated to the bee and to honey token specifically. And so there's a whole MIP around that. And the objective is that maybe a year from now, 2 years from now, I don't know, that literally 100% of all revenue is kind of flowing through that, because that is really what customers care about more than just raw imagery, right? Like raw imagery is helpful, but then you as a customer oftentimes need to go do a whole bunch of processing work on that imagery. And that can be very expensive, right? In terms of AWS fees, et cetera. What they would rather have is have the bee do the work, right? Detect the objects, build the map, understand what's going on, build the three-dimensionality experience, all that type of stuff. And then, that's a much more cost-effective way to do it, because you're doing it on the bee and then you're just uploading parts that are actually relevant rather than uploading just streams and streams of imagery and data.
Well, that's cool. I mean, it sounds like you're looking to push towards attribution of data coming from like individual bees, which I think is a good news for contributors, right? Because their contribution is valued more specifically versus just like contributing data to this large archive that might get used or not. So that's cool. Yeah, maybe touching on supply side now. So the Explorer says you're at 165,000 contributors. I think you guys used to break them out by like dashcam mappers versus reinforcement learning by human feedback, kind of like AI trainers. Does that second category still exist first off? And then also just like, how would you break out those contributors? What's the growth been like on kind of the different contributor types?
Okay, is that second contributor like the reinforcement learning humans? No, it doesn't exist. The reason it doesn't exist is because AI is kind of taking that over.
Is that good now? Wow, that's crazy. Okay.
Yeah, it's totally nuts. It would have been really nice just like if AI would have launched like a little bit earlier, because I think that would have saved us like a whole bunch of time and energy where we built out that entire platform. But anyways, that's technology for you. And yeah, we're very happy kind of where, we still use elements of that platform internally, but in terms of contributors, no, it's not there. And that, some portion of that, of the honey tokens for that community has actually been reallocated. And so I think the community is generally, happy with that. Look, we've sold a lot of bees. We want more. The number one thing kind of going back to that challenge that we have is like supply, and like coverage. And I think one of the things that, maybe this isn't what contributors want to hear, but I think it's the truth, which is there is no world in which contributors are competing with commercial fleets, right? And that we don't need both. Like, I fundamentally don't believe that at all, right? Like a individual contributor, is going to drive on weekends, right? Just like go around parks, whatever, restaurants, whatever it is. A commercial fleet doesn't drive on the weekends, right? In general, like the vast majority of commercial fleets that we have do not drive on weekends, right? And so you need both. And I think we should stop viewing these things as competitive. They're really fundamentally complementary. And then the other aspect of this is that, a lot of these commercial fleets also like the honey tokens, right? Like some of the commercial fleets are like, I don't give a shit about the honey token. Others are like, this is awesome. This is great. This is very cool. This is kind of icing on the cake for me, right? And, for a project as ambitious as ours, like a Marseille, France, you need, these commercial fleets, right? To drive the kind of coverage that we're talking about. And to be continuously refreshing and all that type of stuff. And so I think there was like this, perception, especially in the Hivemapper community, which is like these two things cannot coexist. And I think that is just flatly not the case at all. They should coexist. And I think that like you as an individual contributor, you want more coverage for the overall network. such that you get more customers, right? And if you have more customers, there's more more honey token burn, and then you're happy, right? If you're going to try to be like, no, this is only mine, and I'm only allowed to do it in my region, then you're actually fundamentally shooting yourself in the foot. And I think that like that scarcity zero sum game, at least in the Hivemapper network, like we are nowhere close to that. We are so far away from that that it's kind of like silly to talk about. And I kind of get where it came from, right? Like in the early days of the IoT network. But the problem with the IoT network was there was no demand. It wasn't like I have this hex and you have this hex and zero sum game, whatever. It was like, if there was demand, like there would have been endless amount of opportunities for supply side.
Maybe like on this note, what would you say you think is more important for Hivemapper, like going forward, whether it's kind of like unique kilometers driven, which allows you to kind of see new things that are happening on the road, or like total kilometers, which probably fits better into like the autonomous driving edge use case? Because it sounds like, I would assume the commercial fleets just give you a ton of like mileage, right? They're just like seeing the road all the time. They're always driving. Whereas like individual contributors might be taking the scenic route, might be mapping new roads. What do you see as kind of more important going forward? Or maybe they both are, but
yeah, they're both. I mean, the way to think about this in terms of Hivemapper is that the more drivers you have, the more products you can offer, and ultimately the more revenue you can generate. Let me give you a very simple example. If you have a relatively modest number of drivers, then you can, generate road width information, you can generate lane information, you can generate speed limit data, turn restriction data, things that fundamentally don't change that frequently, right? But then if you go the next layer up, like construction, police, temporary road closures, etc., much harder to do, right? And so then, let me strengthen that or sharpen that. Much harder to do if you don't grow your base of supply, right? You need road kilometers and total kilometers, but in this case, very much total road kilometers. So like there are some markets, like let's say in LA, where we're very strong, where the name of the game now is like total road kilometers, more so than unique road kilometers, right? Because we want to see all the road constructions. But then there's other cities like a Marseille, France, or even a Des Moines, Iowa, where the name of the game is like, let's just get some really great unique coverage, right? To start off with and make sure like all the roads have been collected at least once, type of thing.
That makes sense. Unique coverage first, and then you just want to remap it frequently based on the demand of the customers in the area. And yeah, you mentioned it before, but incredible stat. You guys have mapped 36% of the world's roads in just a few years. I think Nick from Blockworks Research asked this on Twitter, and I actually also had this question in too. It's just like, how do you get to, he said 50%. I was curious, how do you get the other 64%? Besides maybe just getting more contributors, right? Are there other things you guys can do? Are there different kind of go-to-market ideas? Yeah. How do you increase that coverage number or keep increasing it?
Yeah, there's not one answer, right? There's like multiple answers here. There's like commercial fleets is one part of it for sure, like going out and reaching out to large commercial fleets that have, a really nice footprint. There's partnerships, things that we're working on, but I think from a liquidity for the honey token perspective, I think the big thing is liquidity, right? I mean, I've mentioned this in that post that you were referencing at the top of the conversation. Is one of the big problems for DePIN projects right now is there's not sufficient liquidity, right? And we're kind of locked out of some of the major Asian exchanges where a lot of the volume flows to, right? And so that's a problem. I mean, just like straight up, that is a fundamental issue. And so, it's frustrating. Like it's very frustrating for me because it's like, wait, we have like real product, real customers, real everything. And we're locked out of those exchanges, which fucking sucks. Right. And so that is a problem that we are now tackling head on. We have to, because I think if we're going to realize the vision of DePIN, which is, supply and demand kind of working in concert, I do think the token is an important aspect of that. and that requires liquidity, and that requires a lot more liquidity. So, these, look, we can bitch and moan about it. Like, it's not fair. It's not this, it's not that, whatever it is, but you just got to play the game on the field and solve the problem. And so that's what we got to go do here. Because I do think in not all markets, but I think in certain markets, you definitely see that like token price go up, boom, you see a whole bunch new supply coming on board. And then the question is like, how do you convert that supply into like what I refer to as like sustainable long-term supply? There's always these people who kind of jump in and they do it for like 6 months, 9 months, and then they make a little bit of money and then they're out, right? Like that's not long-term sustainable supply. Like you really want, it's much better if like you have somebody who's going to be like, okay, I'm going to like, give this to like somebody that I know who drives a lot, right? Or go recruit them or whatever it is and share the token. But, that's a whole other problem. But like, I think I definitely see like a lot, we see it. I think a lot of other projects see it as like, you have all these people that I call them like DePIN tourists. They jump into like whatever project's hot, make a little bit of money, like make $50, $100, and then they're on to the next thing. It's like, okay, well, that doesn't move the needle for anybody.
Well, yeah, I mean, that's a good segue. Like on the topic of growing the contributor base or maybe making it more sustainable or long lasting. Have you heard of Fractals?
So I haven't. I saw a whole bunch of people kind of like tweeting at me about it, but I don't know a lot about it.
Yeah, it's a project started by Sean, who used to work at XNet, and it's basically like a DePIN fractionalization platform. So they've integrated with, I think, like XNet, Helium, and GeoNet right now. But basically, like installers or deployers can fractionalize an existing deployment that has like earnings already and has like historical performance on earnings, and they can sell shards of it to anyone around the world who can kind of buy a share of this and then get paid out, whatever fraction of the device and the deployment that they paid for. So I don't know if it would work exactly the same for Hivemapper, because maybe it would work in the case that like an individual wanted to buy 20 of these and kind of set them up. But like a big commercial fleet obviously would probably just be happy to pay the 19 a month. But it's a way to basically connect global pools of capital with really talented DePIN deployers who have installations who are trying to like, share them or like earn revenue now that they can then pay out later to go do more deployments. But pretty interesting idea that's started to take off in DePIN a bit. Do you think this would ever make sense for Hivemapper? Or
yeah, I'm very open to it. Like I think it could potentially work. I think I'm not sure it'll work as well with like the $19 a month plan type of thing, but I think if you buy the hardware upfront, then there's like this asset that you own, and there you go. You can kind of fractionalize that and all that type of stuff. So I think it would work better in terms of just buying the hardware, straight up. So yeah, so that's. But I'm eager to learn more about it for sure.
Yeah, and I think they have a bias for the highest kind of earning, highest quality deployments on any network. So like, because those are obviously more valuable to investors. So if there was like a fleet of dash cams that were just driving a ridiculous amount of miles per week and earning a crazy amount of honey per week, like that installation or that deployer would probably benefit the most from listing on here. So yeah, I mean, happy to connect you or anyone on your team with Sean if it's ever of interest, but they're looking to integrate a bunch of DePINs basically and get listings on here.
Getting back to like the sustainable supply question, right? That to me, I think is, this is good. This is a good signal, right? That like the DePIN industry, the DePIN category is maturing, because now people are being a little bit smarter about what is good supply versus bad supply. Or not just bad, maybe not bad supply is not the right term, but like supply that is very fleeting.
Mercenary supply, yeah.
And so, being a lot more thoughtful and saying, no, we got to go find really good sustainable supply, and making sure, like in our case, the device itself, for certain types of drivers has inherent value beyond just the honey token, right? And so we think that that is a critical thing. If you want to earn the honey token as well, that's awesome. And we love it. But, making sure that there's just inherent value, the utility in the product that goes beyond just the token, I think is important to have.
Definitely. And then maybe two like kind of rapid fire questions from the community. One is what you kind of touched on in the beginning of this conversation, but Teslas and a lot of other electric vehicles are starting to have cameras on them themselves. Like someone on Twitter asked, do you view Tesla and other EV cameras as threats? Like how would you consider working with them in the future? Like I know Nadix has like an integration with the Tesla cameras where they have a piece of hardware that can tap into them. So like, what do you think about that? Or how do you think about, cars having cameras increasingly into the future?
That's a very broad topic. And so I'll try to break it down to like how we look at it from different perspectives. If somebody said, hey, we want to integrate the Bee's software technology stack that is running on the Bee today that's generating the map and doing all that type of stuff. But we have our own cameras and they're deployed on whatever, X number of our vehicles. And yes, those are the types of conversations that we have all the time for sure. I will say this about Tesla in terms of their own mapping engine, they've done a really good job, right? I think they are top tier, quite frankly, in terms of extracting out, data, imagery, video, etc., from their vehicles, uploading it, processing it, building their own map, right? Fundamentally. And so now, two things about that. One is that they probably never sell that to anybody because it's their competitive moat. Number two is if you're trying to build a global map, there is no single car manufacturer that you could go to then go and build that map, right? Like if I could snap my fingers tomorrow and say, hey, our software is but I only get to choose one car manufacturer. Our software is running on every single car in the world tomorrow. Like even Toyota, I would not be able to build a comprehensive global map, right? Google wouldn't be able to, no one would be able to. So what that means is that you need to be able to sit across many different types of cars and brands and all that type of stuff in order to really build a global map. Like Tesla obviously is a great map of, San Francisco and, Los Angeles and Miami and a couple other major cities. But I bet you if you go to Des Moines, Iowa, you're not going to have a very good map, right? If you go to certain parts of Mexico, you're not going to have a very good map. And so, it's incumbent upon, us you having like a third party that can kind of sit across all these things with the sole focus on building a truly global map.
Right. Yeah. It reminds me a lot of maybe how I've described Demo to people in the past of like, why is Demo interesting or what's the value proposition there? And it's like, all the car manufacturers like could do something similar, but they're all kind of siloed in their own walled gardens. And then there's no incentive for them to share the data with third-party developers, with other manufacturers, anything else. So I think the same thing kind of applies here and makes sense. The other question was one Twitter community member says he came to the conclusion that Hivemapper now has a lead time of 3 to 7 weeks for new static feature attribute releases. I'm not even sure what that last part means, but I think he thought it was interesting. So I'm curious, what do you think he meant there? And is that the case, or what's the kind of rollout timeline for features?
I think what he's referring to is, I think he's referring to features in terms of road features. In other words, speed limit signs, turn restriction signs, like all that type of stuff. And there's like, generally speaking, there's two types of, there's things that are static, which is things that don't change that frequently. So that would be like a speed limit sign or a stop sign, etc. And then there's more dynamic features, which are like, construction, work zones, that kind of stuff, things that are changing maybe daily or weekly, etc. And so I think what he's saying, if I understand the question correctly, is things in terms of us being able to detect static road features, stop signs, speed limits, etc., that we have, we're seeing it before most of the other major mapping companies. And
Oh, I'm
that's
sure. Yeah.
by 3 to 7 weeks. I think that was the number that he said. I think that's true. But I think it's very hard for anybody to prove that. Like it would take a
It's
lot
so
of,
location dependent, right?
yeah,
I mean, yeah.
exactly.
Like in places where you have a lot of mapping and Google Maps or someone else doesn't, you might have a 6-month lead time.
Right, exactly. So I think like you would have to look at it by region. It's a hard thing to prove, but I think we're getting really good is the short version. Especially with static features, like the B is phenomenal, both in terms of detection as well as positioning and all that type of stuff. I'm getting into the weeds here, but like the things that customers actually care about, it's getting really good.
Well, awesome. Is there anything else we didn't cover that you want to hit? Or if not, what should we be looking forward to? Where do you want our listeners to find you on the internet, learn more, that kind of thing?
I think that the one thing that we didn't talk about, maybe we talked about a little bit, and I think a lot of people in the Hivemapper community are interested in this, is like, the price action around the Honey token. And so if you don't mind, we can kind of dig into that a little bit more.
Let's do it. Yeah. What would you like to cover?
Yeah, I mean, I think there's a lot of things going on in the markets right now. One is obviously there's a bull market around stable coins, which I actually think is like good, right? Because stable coins are actually like fundamentally super useful in a whole variety of use cases, etc. So like there, I'm excited actually, because I think, and we were talking about this a little bit before we jumped on the podcast, which is like here in Silicon Valley, there's a lot of entrepreneurs that maybe 3 or 4 years ago wouldn't touch crypto, and now they're leaning into it primarily because of stablecoins, right? Which I think is awesome. I mean, I think the other thing is that people who were like, call them pure bettors, like, or gamblers is probably the better term. That, and they would read a white paper from Helium or whoever it was, and then basically place a bet, right? And there was a fair bit of that kind of money that has really gotten sucked up by the meme coins. That's not a like, I'm not making a judgmental thing, right? Like, is that good or bad or whatever it is in terms of society? I'm just saying like the reality, the game that's occurring on the field right now is, those types of people have found meme coins to be a better product market fit because they don't have to go read a long white paper, to then make a bet, right? They can just be like, oh, I'm going to bet on this token because I like whatever, about it. And that's fine. That's great. That's not an issue at all. But the reality is that has definitely sucked away, some liquidity from the DePIN category as a whole, right? There's no doubt about that. So, and then the third aspect, and I think we talked about this a little bit, is like, because most of the major DePIN projects are not on the Asian exchanges, that's another problem, right? So you kind of have like 3 things that have moved or sucked out some of the liquidity into other sectors, or, we just don't have access to that liquidity pool at all. And so that, we're going to have to tackle all those problems and figure out like how to get liquidity back into the DePIN category as a whole. And I think that's a really important challenge for, the entire segment to figure out, but definitely for us to figure out.
I think you could probably group liquidity or capital, not super cleanly, but into like speculative and non-speculative. And I think the way to drive positive price action on the non-speculative side is just like bring in a ton of revenue, right? And accrue a lot of that to the token and have buybacks and burns and just have a real business on chain. And then I think, and you guys are obviously, speeding after that and growing the business there. And then on the speculative side, I think it's just like narrative creation and marketing and telling a good story and getting the word out, which hopefully this podcast will help with, and kind of the big raise and other media efforts. But yeah, I mean, do you have any other kind of like out of the box ideas on maybe either of those 2 fronts in terms of like bringing liquidity back to DePIN or driving positive price action for these tokens?
Yeah, I mean, there's a couple of things. I mean, the buyback and burn thing, I think we're going to watch this play out. Obviously, Helium's the first that has hit this deflationary point, right? And so I think the question for them is going to be, and for the entire category as a whole, is that can they leverage this very important milestone, this amazing milestone, that they've achieved now, and can they leverage that into a narrative that makes sense for everybody, right? And that's their challenge, right? And I've talked to some of them, and I think they know that's their challenge. Is like, that's amazing. The numbers are up and to the right, and now it's deflationary, but you got to take that, what's happening on the field, and then convert that into a story that people can understand so that they can act on it, right? And we'll see if they can do that. But I think they've done the hard part in a lot of ways of actually building a real product, a real business that's generating real revenue. And so I'm going to be watching that very carefully. We're not quite there yet. I think last week we did about 45% of the emissions were burned. So we're making progress, and I think we'll get there. But we still have work to do, and we'll execute and get there at some point. And so, helium's the first to hit this deflationary point. Now, can they leverage that into the larger marketing narrative? We'll see. I think that the time will tell. I mean, kind of getting back to this liquidity front, I was in New York 2 days ago, and I met with a whole bunch of funds and all that type of stuff. And a lot of people come up to me and they're like, I want to be buying more, but I literally can't. Right. And so, and that's fundamentally because, and when they say buying more, they're talking about buying more honey tokens, but they can't put down $1 million bet, because if they put $1 million bet down tomorrow, on Coinbase or whatever, that's going to move the
liquidity is that low. Jeez.
Yeah. If they put $1 million down, they would have to space that out over, multiple days, in some cases, depending upon how much they want to bet, and invest. It could be multiple weeks. And that's frustrating for them. Right. And I get that. And so even though the demand is there to buy more honey tokens from the open market, that liquidity issue is something that we got to solve.
Have you or the foundation ever thought about liquidity provision, given that you guys probably own a good amount of tokens? Yeah, obviously you'd have to pair it with USDC or stables probably, but
I mean, there's a lot of things that, we're starting to dig into on this side to, help fundamentally and solve this problem. It is a real problem. What that means is, I think we're at about 1.5 million a day, 1 million to 1.5 million a day, roughly, in terms of volume. I think helium is 6 to 8 million a day, roughly. But anyone can look at this and say, this is absurd. There are, L1s that literally have 10 users on them and no revenue, right? Or practically zero revenue, that are doing 100 million a day in volume, right? And so we got to figure out how to solve this problem, right? This is an important issue for maybe not even just DePIN. I would argue, I think it's an important issue for Solana, right? Because most of the major DePIN projects exist and are built on Solana, and I think that's a big part of their competitive advantage. I think that's a big part of their story. And so I think it's important that we all together, figure out how to solve this problem.
For sure. Yeah, I was just going to try to look at DeFi Llama or something to see the total liquidity you guys have outstanding, but I'm not finding it. But yeah, it's definitely, I think, I'm glad you're bringing it to my and our attention, because I did not know that it was kind of a limiting factor, but it makes sense.
And these are sophisticated, investors, right? Who, have done their homework, in terms of understanding Hivemapper, Honey, etc. And, they're not just day traders, and so, yeah, I think this is a problem that we as an industry have to solve. I mean, it's not industry, it's category, whatever. And that, Solana needs to be part of the solution in terms of helping solve this for DePIN, right? Because this is one of the major ways that DePIN thrives and takes that next step.
Yeah. Well, thank you very much for coming on. Where would you like to point our listeners to, to learn more about you or Hivemapper, or how would you like them to get involved in the project?
Well, probably most of your listeners are on X, I would imagine. So definitely like check us out, Hivemapper on X. You can also just check me out. I think my handle is A Seidman on X, and so I'm pretty active there. Or if you're like super into the details of Hivemapper and want to learn more, the Discord is also a great place. There's a lot of people who are like, know a lot about all the different products and technologies and all that type of stuff on our Discord as well.
Awesome. Well, yeah, thanks very much for coming on, and best of luck in DC today. It's preaching the gospel.
Thank you, man. Appreciate that.